Hi, everyone. How are you? Hope you're well. So, this is the Love Money Show. We're going to talk about what the Fed is doing and the housing market. So, first of all, we're going to talk about what is the Fed. So, the Fed, it sounds like this big, scary name, but what the Fed is actually seven people. There is Jerome Powell. You hear his name a lot. There is Lael Brainerd. There's Michael Barr, Michelle Buchanan, Lisa Cook, Philip Jefferson, Christopher Waller. Seven people. So if you look at their pictures, it's very interesting. There are, the Fed is composed of three white men, two white women, one black man, one black woman. And that is the Fed, seven people. And the Fed, it is, they're appointed by the president. And what the Fed is, it is the central bank of the United States. And what they do is they watch and study the economy. They are the one changing the interest rates back and forth. They hold regular meetings about the economy. They make money and credit available. They meet regularly. Like I said, equal access to credit is what they say, and stability in the financial system. So they're looking at the economy at all times, studying the economy, and tinkering around with the interest rates. And they meet on a regular basis. So the Fed, they are committed to bringing down this inflation at all costs. So there are no rate cuts. And the Fed, they just met recently. They just met 3 weeks ago, and their decision was that they're not cutting the interest rates. They are serious about decreasing this inflation, and they're going to decrease inflation at all costs by increasing this interest rate. So no cuts. That was the decision. So they want the inflation down to 2%. The goal is to get inflation down to 2%. So there's uncertainty now with the outlook of inflation because of what is going on around. That is, the China has they have relaxed their COVID policies, and then Russia is still in war with Ukraine. So all of this affects our economy because of the diseases, and then you have the imports, the exports, things like that. So there's still this uncertainty with inflation. They have raised the interest rates by 50 basis points in December to 4.25 to 4.5%. So in December, they raised the rates by 50 basis points. So the Fed chair, as you know, is Jerome Powell. And in their most recent meeting, which was 3 weeks ago, Jerome Powell suggested that the rate may go higher. That was the suggestion by Jerome Powell. So this was during the December 14th press conference, that by the end of 2023, that it may go from its current rates 4.25 to 4.5 to 5.1% by the end of 2023. This is coming from the Feds. This is a suggestion from Jerome Powell as of their most recent meeting, which was held 3 weeks ago, that the rate may go higher. You heard me correctly, may go higher. So, for people who are out there in the markets considering buying a home, what do? Do you buy Do you buy now or do you wait? So you know the interest rates are outrageous right now. So in this point in time, this is a good time to get into the stock market where the stocks are low. This is a good time to get into the stock markets. You buy low, you hold it 3 years, 5 years, 10 years, 15 years, and you let that money make you money. The money is making you money just by having it in the stock market. There's something called compound interest that is working in your favor. So you're letting this compound, the money's growing. So this is a good time to get into the stock market where the stocks are low, the stocks are plummeting. So you are buying at a lower price than normal. So if you are at a point of getting into the housing market, you desire to buy a house, you desire to buy rental property. So this is a good time to work on your credit. Work on getting your credit score up. And you can do this by yourself by paying off your credit cards. So this is a good time to focus on that, getting your credit score up. Reason being is that that's the first thing they're going to ask you. What's your credit score? And they're asking you that because if your credit score is not good, that means they're going to charge you more. They're going to charge you more for a down payment. They're going to charge you a higher interest rate, and you're going to pay a higher monthly payment. Higher monthly payment. All because your credit score is not good or as good as it can be. So by working on getting your credit score up, by simply paying off your credit cards, you end up paying less for a down payment, lower interest rate, and lower monthly mortgage. So they are basically ripping you off when your credit score is not good. And your credit score is not good because you're not paying off your credit cards. Yes, there's this whole other thing of making sure you pay your bills on time and all these other factors that go into it. But if you focus in on paying off your credit cards, of course, you do not pay them down completely. Paying it off completely is going to make your credit score worse. So you don't pay your credit cards off completely, but paying them down to less than 10% for that increase. And if you're looking for 800 credit score, 3% or lower. So less than 10% for that good credit score. And if you're looking for 800 credit score, pay it down to 3% or less. So this is a good time to get that credit score up so you can stop being ripped off and you can stop living an expensive life and paying more than everybody else is paying. So this is a good time to focus on getting your credit score up. Now, as far as buying a home now or waiting, um, the decision is really up to you. But as far as what is going on in the markets, Jerome Powell suggested in their most recent meeting that the rates may go up. So no one really knows what is going to happen as far as the interest rates. No one knows if the interest rates are going to stay the same. No one knows if they're going to go down to 5%. And no one knows if they are going to go higher. So with that in mind, knowing that no one knows what's going to happen but the feds are deciding this. This group of 7 people who meet on a regular basis, they are deciding what the interest rate is going to be. So no one can get inside of their heads and figure out what is the interest rate going to be in a couple of months. So with that being in mind, whether to buy a house now or to wait, of course, you're going to get into the stock market. Of course, you're going to increase your credit score. Real estate investors do not care what the interest rate is. They buy if the interest rate is good. They buy if the interest rate is bad. However, if you are a first-time homeowner, you can wait, or you can buy now and you can refinance later. However, what you should keep in mind is that if you decide to buy now, or after you get your good credit score, that is, after you get your good credit score, if you decide to buy at that point, make sure that you buy a home that you can afford, that you're happy with the price. Because what's going to happen is that mortgage rate, more than likely, you're going to end up having that same mortgage rate for at least a year before you'll be able to refinance into the lower rates. First of all, there's no guarantee that there will be a lower rate, but you'll be holding on to that mortgage for at least a year before you'll be able to refinance into a lower rate. And that is because you need equity to refinance. And it's going to take time to build equity unless you're buying this home at an extremely cheaper price than you should be buying it. It's going to take time for that home to build equity. So you need equity to refinance in the first place. But if you choose to buy now, after you get your credit score up, that's the first step, get your credit score up so that you don't have to be ripped off. Get the credit score up. After that, if you buy, make sure that it is a rate that you feel comfortable with, a price that you are comfortable with, because you have to build equity before you can refinance into that lower rate. All right. So just keep those things in mind. Again, like I said, real estate investors, they don't sit on the sidelines according to what the interest rate is, and they don't care about what the interest rate is. However, if you're a first-time home buyer, it's a little bit different. You have to weigh your options, get your credit score up, buy only what you're comfortable with. You are comfortable with the price that you're paying, knowing that you're going to be holding on to that mortgage for at least a year before you'll be able to refinance into that lower rate. All right. There's no guarantee that the rates are going to go lower. No one knows what the rates are going to do. All right. So again, buy something that you are comfortable with, that you're happy with the price. And you can do that by purchasing a cheaper home. For example, a cheaper home will give you a lower monthly mortgage. So looking at those three things, looking at the interest rate, getting that credit score together so that you can have a lower down payment. All right. So this is the Love Money Show. If you like the show, please hit the like button. It helps the channel. Hit subscribe if you're not a subscriber, and notification bell next to it so you won't miss an episode. Also, leave a comment. Let me know your thoughts. Thank you for watching. Have a good rest of your night.